So I'm very happy to meet Mark Gilligan. He's head of infrastructure from AXA Investment Managers. Mark, many thanks that you will be here. You're just coming out from your presentation. You have had a speech here, an outbreak speech regarding to the European infrastructure investments, opportunities and risk of decarbonization, electrification and digitalization in Europe. I think exactly that is what the people like to listen to. That means infrastructure. Which investments show an actual electricity to inflation?
So if you look across the infrastructure universe, you have different types of cash flow fundamentals. You have contracted assets, you have regulated assets, and to make it simple, you have merchant-based or GDP-exposed assets. The regulated assets tend to be directly or indirectly indexed to inflation, and so regulated utilities tend to deliver inflation-protected returns. Many of the contracted assets also include a provision to allow for escalation in line with inflation. The final category, those that are merchant-based and exposed to GDP, are somewhat more problematic. And so in those situations, the infrastructure owner needs to have a certain degree of pricing power in order to be able to pass through inflation to consumers. Now what we're seeing at the moment across Europe is extraordinarily high rates of inflation we haven't seen since the 1970s. And as a consequence, what we're seeing is that those sorts of assets which don't have contractual or regulated pass-through are having to scale back their pass-through of inflation. Because if they were to simply pass through 10 or 12% inflation to the consumer, it would result in significant loss of reputation and a huge impact on the right to operate. And so ultimately, sophisticated and responsible infrastructure owners are quite conscious of the need to spread out that inflationary impact over the course of 3 to 5 years, rather than capturing what might be seen as being a virtuous, instantaneous pass-through of inflation.
Is the war in Ukraine affecting or accelerating the move away from gas?
So, look, as a pan-European infrastructure investor, we are seeing a combination of impacts from the war in Ukraine. The first one is the obvious fact that we've now got embargoes against the importation of Russian gas into Europe, and we've seen a very quick pivot away from that supply of gas to capturing liquefied natural gas from the United States and from Qatar. That's been a very important way of bridging the loss of input gas to the system over the course of this year, and we expect into 2024. So that as a short-term impact, we've seen an acceleration of supply from other sources to meet the shortcomings of losing major supplies of gas into Europe. In the medium to long term though, we think this creates even greater pressure and greater investment inflows into renewable energy to effectively wean Europe off fossil fuel power for its economy.
Let's talk about the US Inflation Reduction Act. Will the Reduction Act affect the rate of innovation in Europe?
It's certainly interesting, right, to see such a huge input of subsidies to the US renewable energy sector. And so President Biden and his administration deserve to be congratulated for that huge contribution to the energy transition. We're certainly seeing that cause consternation in the European Union and in the United Kingdom as people get concerned that capital may therefore flow more aggressively towards the United States in preference to powering the energy transition elsewhere, including here. The reason I'm not particularly concerned about that is we are seeing ample increases of inflows to this space from institutional investors. And secondly, the US system tends to be dominated by tax breaks and tax equity, which are most favorable to US taxpayers. And so we see the Inflation Reduction Act being a magnet for US capital to invest into the energy transition, but less attractive for non-US tax-paying entities. And so therefore we think there'll be a balance of capital remaining to power the energy transition beyond the United States.
Can the net zero target be achieved in the Europe by 2050? Is it possible to reach that?
if it can't be achieved in Europe, it won't be achieved anywhere. And so my view is that the most important thing to focus on is not immediate short-term worries about the most difficult to abate final 20% of the energy transition. We already have the technology, whether it be wind or solar or other aspects of the energy transition, at a utility scale, at long-term levelized cost of energy below other sources of energy, and therefore I'm extremely optimistic about the capacity to deliver the substantial majority of the net zero energy transition over the course of the next 27 years. And then, it's a matter for us challenging, the next generation of investors to finish the job as we work through the course of the 2040s and 2050s.
Are we wasting too much time debating the last 20% of changes when 80% of the solutions are already within reach?
I think it deserves consideration as a technical focus of where we need to put innovation capital over time to help deal with that final 20% of hard to abate aspects. But the concern we have is that the debate often causes a huge amount of pessimism as people think that the whole problem is impossible and therefore we should just continue doing what we're doing. The reality is an 80% progression towards net zero is significantly better than a 0% progression towards net zero. And so from my perspective, I think let's get the lion's share of the work done as fast as we can and worry about that last 20% over the course of the next 25 years.
Mark, I have you here today, and so I take the chance that you tell me a little bit more about the core competences from AXA Investment Managers regarding to infrastructure. Maybe you can give us a briefly glimpse of your expertise and your track records and so forth, maybe an example to learn from your experience.
So infrastructure investing is for me, a genuinely dynamic and global sector to invest in. I started life as an engineering geologist. I spent 10 years as a corporate mergers and acquisitions lawyer, and I've spent almost 20 years now bringing both of those skill sets together to be an infrastructure investor. At AXA Investment Managers, we are conscious of building diversified teams that draw upon engineering, finance, accounting, operations to ensure that when we look at building, developing, operating infrastructure, we're able to capture the full value of the asset and to optimize operations. And what's interesting about infrastructure investing is that it's about incremental change. Right? You don't get to simply say we're coming to a company and we're going to transform it in 6 months and make it a completely different company. We're investing in infrastructure which is more like a super tanker heading in one direction, and our job is to make incremental changes over time to improve things. So at AXA Investment Managers today, within the alternatives division, AXA IM Alts, we are the largest investor in real estate in Europe. And so we have a phenomenal portfolio of real estate, which is right up against the infrastructure sector in terms of being an end user and an integral part of the overall infrastructure of society. In the natural capital space, we have a phenomenal forestry program which allows us to sequester carbon. It allows us to invest in sustainable supply of timber and to provide sustainable biomass to the energy sector and infrastructure. We also have a very significant business in alternative credit, spanning real estate, infrastructure, and more exotic alternatives. And then finally, in the infrastructure space, we today have a portfolio of more than 15 billion euros across infrastructure debt, where we're the third largest non-bank lender to infrastructure in Europe, with over 130 loans to the infrastructure sector. And we also now have a 5 billion euro portfolio of infrastructure businesses spanning on the equity side, spanning digital, energy, social, transportation, and utility infrastructure, all aligned with the overarching theme that, in our conviction, climate change is the great issue of this century, and therefore we should only want to own assets which are fit or adaptable for a decarbonising, electrifying, and digitalising net zero sustainable world.
Mark, it was a pleasure talking to you. I wish you a lot of success in your profession, and thank you for this interview today.
Thank you very much.